Good morning, sir. Can you hear my voice?
Hi, sir. Good morning, sir. Actually, I'm outside.
Okay, my voice is audible, na?
Yes, sir. Audible, sir. Audible.
Yes, sir. Thank you. Thank you. Can you make me an admin because I won't be able to share the PPT otherwise?
Sir, please wait for 5 minutes, sir. I will make you as a co-host.
Yes, sir. Please.
Okay. Thank you. Thank you. Yes, sir. Screen is visible, sir.
Okay. Can you see my Excel sheet as well?
Yes, sir. Yes, sir. Excel is,
Yes.
sir.
Excel and PDF both are visible, na?
Both are visible. Yeah.
Yes, sir. Yes, sir.
Okay. Thank you. Thank you.
Ganesh Murthy sir, good morning.
Yes, sir. Good morning, sir. Good morning, sir.
He is the person who is behind the curtain and well enough to share Zoom also.
Okay. Nice to meet
Thank
you,
you,
sir.
sir. Thank you.
Thank you.
Thank you for the welfare of the group members. That's all. Okay. Group members, you can talk, you can chat, no problem about it. Okay.
Okay. Thank you, sir. Thank you.
Thank you.
Thank you, Ganeshan, sir. Ganesh Murthy, sir.
Yes, sir. Thank you, sir. Nice to meet you, sir.
Yes, me too.
Respected members, you can chat or you can put it in a chat box. No problem about it. Okay, we will share the result in the question answer session. Ganesh Murthy sir, once it is started, you may please on the recording also. Okay, recording absolutely to you. Okay, Ganesh Murthy sir.
Yes, sir. Yes, sir. Recording.
Okay. Recording you may please manage it. Okay.
Okay, sir.
Parag sir, Ganesh Murthy sir had taken webinar since November itself, and I think
Great.
about 15 to 20 webinar he had taken himself.
Nice to meet you.
And most probably his webinar is not for a 2 hours or 3 hours. He's taking for a 5-day course, something like that.
Detailed one.
Detailed one from
Absolutely.
the inception.
Clause by clause.
Clause by clause. Most probably by he's at Karur, Tamil Nadu, and so the strength is Tamil people, so he is taking class on Tamil also.
Great.
English also he is also well versed. No problem about it.
Thank you, sir. Thank you.
Yes, sir, it's me only, Ganesh.
Okay. No problem.
Okay, I make you and see Parag sir as a co-host. So in case if I'm not available, you can.
Okay, sir. Okay. Thank you.
And sorry for I'm not able to contribute.
No problem, sir. I understand that. No problem.
Actually, I'm in the hospital. That's why.
Okay. Personal thing. No problem.
Thank you, sir.
Yes, welcome, members. A warm good morning in December because of we all are busy. Today, 7th of December, so that tedious challenge and everything is to be run. Nowadays there is no any problem for Sunday holiday or something like that. All are in that means in digital mode. Okay. Today, we have a great faculty. His name is CA Parag Paranjpe, and he is a member of ICAI since 2003. He is a FCA, Fellow of Chartered Accountant, Commerce graduate from Pune University. We are blessed with him because he was teaching income tax for the CA intermediate students for the last 6 years and information systems to ICAI students, regular speaker at the various forums such as CPE seminars conducted by the various branches of ICAI and study circle associated to discuss various aspects of GST. He is our group member and we are blessed that he is with us. Moreover, the Zoom and everything else being done by our group member. He is none other than who is known to me, and he is conducting a group called the Attics. Okay, so over to you, sir, for making the webinar most lively. Members, if you have any doubt, put it in the chat. We can answer. We have a question answer session so that we can answer it. No problem with it. Or without having elaboration, over to you, sir. because you are a group member known to us, everybody. Previous year also we had conducted 99C by you. Okay,
Yes,
thank you.
yes.
Over to you.
Thank you, admin sir. Thank you, Ganesh Murthy sir. Thank you, Venugopal sir, for giving me an opportunity to present the today's PPT on GSTR 9 and 9C, which has been the flavor of the season. Last year and this year, there have been major changes in GSTR 9 and 9C. Few changes are made because they had to be made long back, but although late, they have made it. Some changes are cosmetic changes, such as label names have been changed, the headings have been changed. Certain amendments which have been done in GSTR 9 are not carried forward to GSTR 9C, just like the 6A1. The amendment has been made in 9 but not in 9C. So definitely we are going to face a lot of challenges while doing the GSTR 9C reconciliation. The only thing which is going to help us is just 2 days back, our CA Institute had also released the GSTR 9 and 9C technical guide. So we'll be able to take recourse to that also, guidance note given by the CA Institute. As well as I will be also covering everything under GSTR 99C, whatever amendments have been made, why they have been made, what is the logic behind it, what are going to be the red flags which we need to understand while completing the GSTR 99C related data analysis and reconciliation. As you all know that GSTR 9C is now not to be certified by the chartered accountant, it is to be certified by the management of the company or the management of the assessee, maybe the director, maybe the proprietor, maybe the partner, whoever is the person who is actually at the helm of the affairs. So that is the change which has been made for the last 3 years. So we are not certifying it, but at the end of the session, I will also be sharing a copy of MRL which we should be able to take from the client. Because all said and done, actually practically we are the chartered accountants who are working behind to compare and to prepare the GSTR 9 and 9C. So definitely we should be able to shield ourselves with the help of an MRL. So I will be also sharing the copy of MRL after the seminar is over. With these words, I would like to start with today's presentation. So now I will do the basic recap of the GSTR 9C scenario. Basically, to enable GSTR 9 filing, we need to mandatorily file GSTR 1 and 3STR 3B for the financial year 24-25 for the year which we are filing now. So unless and until all the GSTR 1 and 3B are not filed, we won't. GSTR 9 tab will not be activated on the GST website. Then we need to understand that in table 4, that is the turnover on which GST is payable. Table 5, turnover on which GST is not payable. Table 6 is the ITC which is coming from table 3B. And table 6 and 7, they are all pertaining to current financial year, that is financial year 24-25 only. The value pertaining to preceding financial year shall not be reported here. So we are need to understand, say for example in GSTR 1 for financial year 24-25, there are certain transactions for 23-24 which have been reported till October 24, maybe sales, maybe credit notes or debit notes. Then we need to understand that from GSTR 1 and for 24-25 we need to remove 23-24 related sale or credit note or debit note related data. Then if we have forgotten, if for example in tally data we have 100 sales invoices, and out of 100 we have shown, say for example 95 invoices in GSTR 1 for financial year 24-25, and those 5 invoices, out of that 5 invoices, 3 have been shown in GSTR 1 for 25-26 up to October 25. Then these 3 invoices out of the 5 which are not been shown in 24-25 but shown in April 25 to October 25, these invoices will be shown in table 10 or 11. If it is plus, it will be 10. If it is minus, it will be table 11. And the last 2 which are not been showed in any of the GSTR 1, neither in 24-25, neither in 25-26. If you have missed to show those invoices, credit notes, whatever may be the case, then those need to be reported in table 4 or table 5 as the case may be. If the liability is there, it will be table 4. If there is no liability to be paid, that is, it is zero rated tax or exempted supply or that sort, then it will be shown in table 5. So we need to understand that table 4 and table 5 is exclusively for financial year 24-25. Then if the taxpayer has forgotten to declare any liability in financial year, logically if you understand that the 2 invoices which are not shown in either of the GSTR 1 will be shown in table 4 and table 5. Now, in GSTR 9, the table 9 is getting that liability of IGST, CGST, AGST and cess wherever applicable will be picked up from table 4, because table 4 has the liability for inward supplies on which liability is payable, that is the RCM, as well as outward supplies on which liability is payable, that is output tax liability. So the total RCM plus output liability total will come to table 9 of GSTR 9. So we need to understand if some invoices are forgotten to be shown either of the in any of the GSTR ones, then because of that the liability will increase in table 4 and therefore that liability will come in table 9. Now if you go to table 9 of this financial year, there is one more column which has been added, where is the liability less ITC paid, less amount paid by cash. Whatever is the excess amount which needs to be paid will be shown auto-populated mode, wherein you need to understand that if any liability is payable in GSTR 9, table 9, then that liability will be shown there, so that based on that you need to file the DRC 03. Then if any taxpayer has forgotten to claim any input tax credit can be filed, it can be taken only by way of 3B, only up to the date of October 25 for the last financial year. But beyond that, 3B, you cannot claim any ITC for financial year 24-25. And in GSTR 9, of course, you cannot claim any ITC. But if you want to show any liability, yes, you can show it in GSTR 9 definitely. Then recalculate the amount for credit reversals. Many times it happens that we have exempt supply and taxable supply. Then rule 42 and 43 will come into play. And if you are reversed less in a monthly 3B, you have to take a yearly call also, and whatever is the shortfall, you need to make the liability payment. Towards the end of the return, the taxpayer shall be given into option to pay any additional liability declared in this form, that is DRC 03. Taxpayers shall select annual return in the annual drop down form DRC 03, and which can be paid by way of cash and ITC. So this option has now been made available from this financial year. Earlier it was only cash. Then a person who is having multiple GST registration and whose aggregate turnover in the financial year is more than 2 crores shall also file a nil return for GSTN which does not have any transactions during the year. So if it is a multiple registration and if the annual aggregate turnover is exceeding the threshold of 2 CR, then he needs to file GSTR 9 for all his registrations, irrespective of the turnovers of that specific GST number or that specific state. And if the turnover exceeds annual aggregate turnover pan-wise, including all HOs, branches and everything, if it is exceeding 5 CR in that financial year, then it needs to file 9 and 9C. And 9C will be filed for all the GST numbers, irrespective of whether that GST number specific state has a turnover less than threshold. Even then he will have to file it 9 and 9C. So this is very, very important aspect. A person whose registration has been cancelled during the year will also have to file annual return and a final return as well, if the cancellation is completed before 31st of March of the relevant financial year. The final return is in GSTR 10 and annual return is in GSTR 9. Or then another registered person who has opted in and out of the composition scheme, the regular scheme and the composition scheme both during the financial year, he needs to file both the GSTR 9 and GSTR 4 for the relevant financial period. This needs to be important. Income netted off against expenses, and such income has escaped GST. In most of the cases, we do have a recovery from employees, recovery of rent, recovery of certain penalties, which are credited to the P&L of the income, credited to the P&L. Then we need to pick up the taxable amounts which are liable as taken as a supply, and on that we need to pay the tax liability. So we need to understand more or less. Sometimes it happens that in the invoices, transport recovery, courier recovery is been added in the invoice. But while doing the accounting, this recovery is netted off against the expenditure. So we need to understand that such type of transactions should also be taken care of while we do the scrutiny of the tally data. When we prepare the sales register, we should take the indirect income side related income recovery headings like transport recovery, courier recovery or any other kind of recovery, and see to it that on these items also GST has been paid. Then if any transaction has been missed, he to be reported in GSTR 9, yes, which is not reported in, yes, you can show it in GSTR 9 if you forgot to show it in GSTR 1 of 24-25 as well as 25-26. Then what about e-invoice non-compliance? That is going to be a big gray area this year. The reason being, most of the things people need to understand that if your turnover is more than 5 CR from this last financial year, from 23-24, you are already into e-invoicing era. And if you have not done the e-invoicing, done the regular normal invoicing, then what will happen? It will be a big problem, because that won't be taken as a proper document to claim the input tax credit. So definitely your recipient is not going to get the credit, and for you their penalty will be equal to the amount of liability of GST. So compliance with e-invoicing is extremely crucial. It's a situation of life and death for the client. Then we need to understand that in case of common ITC of deemed export exempt turnover from sale of securities, we need to understand that 1% of such sale proceeds should be taken as exempt sale for reversing the credit in Rule 42 and 43. Then ensure most of the things, what happens is when you are filing the income tax returns, there are capital gains which we understand as defined as securities, futures and options turnover hota hai. Then we have turnover of capital gains. Then all this turnover is taken as an exempt turnover only for the purposes of reversal of input tax credit. We need to understand that we need to take cognizance of this 1% turnover, and accordingly that turnover is the exempt turnover. Then Rule 42-43 will come into existence, and whatever is proportion ITC needs to be reversed. If it is not reversed during the year, then you need to reverse it by way of DRC 03. Then also we need to ensure that all credit notes for financial year 24-25 were issued and reported before 30th of November. Any credit note issued after this date cannot reduce your tax liability for financial year 24-25. This is a very important aspect, extremely important. We need to ensure that all the credit notes for financial year ending 21st March 25 should logically be issued before 31st of March, but if they are issued late, then you should issue it and report it before 30th of November. So while doing the scrutiny, we need to understand that if any credit note is shown in the month of November filed in December, then that credit note will not reduce the liability for the client. We need to understand this. Then in P&L most of the times we have a sundry creditors write back. If other payables, then say for example any creditors are no longer payable on which we have already taken the input tax credit at the time of purchase or at the time of booking of the invoices, and if you are not paid them, then the proportionate amount not paid into 18% GST, that ITC should be reversed. And if it is not reversed during the year, we need to pay it by way of DRC 03. So we need to understand a very important aspect. Then import ITC reconciliation to be shown separately for new reporting, bill of entry wise. This I am going to take ahead in one of my PPTs also, slides. We need to review the financial transactions for related party transactions, deemed supply, FOC, corporate guarantee, transactions between related party, HO and branches, status of realization of export proceeds, if the company has availed the benefit of LUT, and if goods are not exported within 3 months or receipt of payment is not within 1 year of service, then in that case, if the time limit is over, then you don't get the benefit of LUT. You need to make the payment. So while doing the audit for GSTR 9(9)C, we need to understand that we need to also compute whether this time limit of 3 months and time limit of 1 year is adhered to. The very important aspect, how do we do the GST audit? So what is the basic documentation which we need? It is the audited balance sheet. For filing the GSTR 9(9)C, we need to have an audited balance sheet. So a person who is just exceeding a turnover limit but not done the audit, then we need to get that audit done at least, and then you need to upload the audited balance sheet for the GSTR 9(9)C purposes, not for 9 but GSTR 9C purposes. Then if the client has a multi-state balance sheet which is consolidated at the HO level, then we need to have a state-wise trial balance for all the multiple GSTs across the states, across multiple states. Audit report of the statutory audit report as well as the tax audit report, because everything is now linked. If you remember in tax audit, in clause 26, we need to report the ITC opening balance, ITC availed ITC, utilize an ITC closing balance. So logically, if we have shown that disclosure in tax audit report, then that should match with the table 12 of GSTR 9C, logically and ideally. In many practical situations, this does not match. So you need to understand, because of the big data and because of the computer related analysis which the government of India has implemented at the back end, your tax audit report data is also getting pulled, and that is going to be matched with the GSTR 990 disclosures which you are making. So we need to understand that practically speaking, when we do the tax audit or we do the statutory audit or both, at that time itself, your Excel sheet should be so much linked that when you finalize the tax audit report or the statutory audit report, your GSTR 99C should also be linked and ready at that point of time itself. So in the month of September, everything is ready. You can sign the balance sheet and you are 100% sure that all your disclosures in your balance sheet, all your disclosures in tax audit report and all your disclosures in GSTR 99C are in sync with each other. Otherwise, then we are going to face trouble at the later stage at the time of assessment, because the tax audit report may be showing a different figure and GSTR 99C may be showing a different figure. Then definitely it is going to be a difficult task for the assessee as well as the CA who has certified the balance sheet. Now, what reconciliation we need to do? Turnover related reconciliation for state level GST turnover from all India audited turnover. Schedule 1 supplies also need to be accounted. For example, branch transfer of purchase of one branch and sale of another branch. So we need to understand that needs to be taken care of while filing the GSTR 99C. Then list of unbilled revenue at the beginning and at the end of the year. Yes, as per auditing standards, as per accounting standards, if on accrual basis revenue is earned, but the billing is done at the next month, then such kind of unbilled revenue which is already recognized in the balance sheet, which is already recognized in the P&L as per accounting standard 9, then those unbilled revenues at the opening and closing needs to be accounted for, and that needs to be shown, disclosed in GSTR 9C. Then one more aspect is compliance of EV invoices, which I already told. Tax liability should be reconciled. Books, tax liability as per GSTR 1 and tax liability as per GSTR 3B. These all three should ideally be matching with each other. Otherwise, it will be a difficult task at the time of assessment. We need to understand the liability as per books and GSTR liability as per GSTR 9 should also match, because whatever is the gross liability will be shown in table 9 of GSTR 9. Then we need to reconcile the balances of advances pertaining to services, of course, because advances pertaining to goods not to be shown, it is already exempt. So advances pertaining to services and outstanding in balance sheet with unadjusted advances. So we have received the advance for services. If you received, say for example, a chartered accountant has received an advance, then he needs to pay GST on that advance also. And if the billing is not done on 31st of March 25, then we need to show such unadjusted advances in table number 4 of GSTR 9. Then we need to do the input tax reconciliation for 2B and 8A and books. Segregation of input tax credit, breakup of ITC into inputs, capital goods and input services. In table 6 of GSTR 9, we need to mandatorily show the input tax credit pertaining to capital goods. That is a mandatory provision. But for services and inputs, we can all club into inputs that is allowed even in this financial year. If you are maintained properly, then you can show all these three separately. But if the data is not clearly available, then at least the capital goods related ITC should be segregated. Then we need to understand that ITC for 23-24, since claimed in for 24-25 and ITC of 24-25 claimed in April 25 to October 25 needs to be taken into consideration. So this is a very important aspect, because in GSTR 3B, the ITC pertains to which financial year, such segregation is not available. It can be for financial year 24-25 as well as financial year 23-24. So whatever input tax credit of 23-24 which is claimed in 24-25 3B up to October 24, that needs to be segregated. So at the time of audit itself, we need to understand that such kind of workings and such kind of Excel reconciliations should be kept ready in the month of July, August, September itself. So the additional working in the month of November and December can be avoided. In the same way, input tax credit for financial year 24-25 claimed in April 25 to October 25 needs to be understood and documented, and list has to be prepared clearly. Then one more reconciliation has been added this year. The table 8A RECO, which is the table 8A figures which are available online, and table 8A related Excel sheet which is available from the download from GSTR 9. Both have different figures, although the table is 8A itself. But multiple invoices are available in GSTR 8A Excel, but those are excluded if you do the reconciliation. I am going to tell you, take an example of this reconciliation of table 8A online and table 8A Excel. We'll talk about it when we come to the relevant slide. Then the RCM liability which has been booked, RCM liability which has been paid through 3B and ITC which has been claimed. In the recent FAQs which have been released by the department, they have even in financial year 17, 18 and 18, 19 also they have clarified this, that for example in 24-25 if some transaction which is liable for RCM, and if the client or the assessee has forgotten to do the RCM, and if during the audit you find out that for financial year 24-25 there is one transaction, say for example security related transaction or foreign import of services, multiple examples could be cited, and yet the client has not paid the RCM, then the client should make the payment in financial year 25-26 and pay it also and show it also, claim the ITC in financial year 25-26. Such ITC which is payable for 24-25 but paid in 25-26 is not to be shown in GSTR 9 for 24-25. It will be shown in GSTR 9 for...
Sir, let me intervene. Only Excel sheet is seen, no PPT or anything is being seen. That's the thing.
Oh,
okay. Only PPT is seen in the screen.
PPT अभी दिख रहा है?
नहीं, sir. Only Excel sheet is seen.
Okay, 1 minute. Thanks for. I will just try again.
I thought that you are speaking from Excel. That's the thing. Okay.
No.
Yeah. Now it is okay, sir.
Okay.
Okay.
Yes. Thanks for.
Sorry to interrupt.
No problem. But it's good that you show me.
Okay. Thank you, sir. Over to you.
No problem, sir. So now we are over here, reconciliation of electronic credit reversal and reclaimed statement. In the portal, we need to understand that electronic credit reversal and reclaimed statement is available on the portal. So that portal related documentation we need to download, and that accounting in Tally and accounting on the portal, this should match with each other. The balances, the reversals, the claim, reversal, reclaim, all needs to be taken care of. Then the reconciliation of GST balances as per portal and closing balances as per balance sheet. Yes, electronic credit ledger balances in balance sheet, electronic cash ledger, electronic credit ledger, CGST, HGST, IGST, the tax portion, interest portion, penalty portion, late fee portion, everything in Tally has to match with the 31st of March 25 balances which are available on the portal. If they are not, then we need to understand that when we close the statutory audit, these reconciliations have to be done before we do the statutory audit, because once we have signed the balance sheet and if that is unreconciled, then that will create a problem at a later stage. Reconciliation as per ITC, as per rule 37 and rule 37A. Now rule 37 is if you are not paid the vendor within 180 days, then we need to reverse the input tax credit. And what is rule 37A? If the ITC is available in your 2B because that your customer has, your vendor has filed his GSTR 1, but he has not paid the tax liability to the government by way of filing of 3B. So 1 has been filed, so your 2B has been updated, but a corresponding 3B of the supplier has not been filed. So logically the government has not received that money, and therefore that input tax credit needs to be reversed. So we need to understand that client has to be educated on this, that such type of reconciliation, that GSTR 1 filed but GSTR 3B not filed, such kind of reconciliation has to be done on a monthly basis. It's an additional exercise which we understand is cumbersome, but we need to understand it's a mandatory reconciliation which we have to do, otherwise it is going to be a problematic situation. Then of course the HSN related summary of outward summary, HSN summary of inward summary is not mandatory, it is optional. But for outward, it is mandatory. It is up to 6 digit if the turnover exceeds 5 CR. Separate list of supplies through e-commerce operators like Amazon, Flipkart, where the e-commerce operator has to pay the tax. Because in GSTR 9 in table 4, an amendment has been made wherein the Amazon or the Flipkart people who are actually going to pay the liability, those are going to show the transactions in their table 4. But if I am the supplier and I am doing the business through via Amazon or via any e-commerce operator, then I need not pay the tax liability on it, and therefore that turnover I will be showing it in table 5. But the same turnover, that e-commerce operator will be showing it in table 4, because the liability on that will be paid by the e-commerce operator, not by the supplier. So for me, it is a table 5 transaction for GSTR 9, and for the e-commerce operator, same transaction is table 4 related transaction. The same I would say amendment has also been made in table 5 and table 6 or table 7 for GSTR 9C as well correspondingly. Then a separate list of copies of statutory or voluntary DRC 03, PMT 09. PMT 09 can be filed for moving the cash balances between CGST, AGST and IGST. So if such kind of movements have been made during the year, then that needs to be taken care of. Details of any GST refunds which have been applied or demands have been made or any liabilities have been paid, then needs to be taken care of while filing the GSTR 9. Although this table 14, 15 and 16 are not mandatory, but definitely if you have the data for the refunds and the demands, then definitely it's better to have it on paper. The reason being, I will tell you, such kind of refunds applied or I would say the liability demands raised, when you do the statutory audit, there is one concept of contingent liabilities. So if you have received any notices and not paid it, then that disclosure available in contingent liabilities. So while doing DSTR 99C, we should inquire with the client that what is the status of that contingent liability, whether it is still a contingent liability or you have paid it. If you have paid it, then you need to disclose it in GSTR 99C. Or at least if you have not paid it, then while filing GSTR 9C, you should compile a notes wherein the status of GSTR 99C or any observations which I already observed during working of 99C should be tabulated in by way of a Word file, convert it to PDF and upload it while filing the GSTR 9C, so that whatever disclosures we need to make, you need to make it in 9C, so that at the time of assessment, they cannot invoke any mens rea against you because you have already disclosed everything while doing the GSTR 9C. Then e-way bill compliances is very, very important, of course. Now we come to the notifications and the advisory. What are the notifications issued? The 13/2025, formally notifying the GSTR 99C, wherein multiple amendments have been given. Then notification number 15/2025, provided for exemption for filing GSTR 9 with aggregate annual turnover up to 2 CR. Then the GST department has also come out with 2 sets of FAQs. First set was released on 15th of October 25, and again a second set of FAQs have been released on 4th of December 25. So I am going to take the cognizance of both the FAQs during my slideshow. Now we come to the actual changes which have been made, which as I told you, e-commerce operator table 9.5, section 9.5. The e-commerce operator will show the same transaction in table 4, as because that supplies outward supply liable for payment of tax for the e-commerce operator, while the same will be shown as table 5 transaction in GSTR 9 for the supplier himself. The input tax credit related rule 37 is 37A has been made stricter, wherein you need to first claim, then we need to reverse, and then we need to reclaim. Now this is the chronology I am going to take by way of an Excel sheet examples as well. So don't worry, I won't even if you find it is complicated, but I will make it easy for you by way of some examples. Then table 8H, if you have paid IGST or imports in March 25. If you have paid IGST on imports in March 25 but claimed ITC in April 25, this much now go in table 8H, so that there is no unexplained differences. This also I am going to take in the next slide show. Table 6A, yes. Now everybody knows that table 6A is auto-populated from 3B, which has been filed by the SSC for the months April 24 to March 25. So logically table A का जो output आएगा वो 3B से ही आएगा. All the output of 3B will be captured in table 6A, and this is a non-editable field. So also we need to understand in table 6A, all RCM transactions, FCM transactions, ISD input tax credit, import IGST is coming on gross basis. So this is very, very important, because in 3B, we first claim, then we reverse. The reversal will come in table 7, and the gross which you have claimed or reclaimed will come in table 6A. So we need to understand that if you have originally claimed in, say for example, April 24, and again reversed it in May 24, and again claimed it somewhere during the 24-25, then the same input tax credit will hit your 3B twice. So if that same transaction is coming in your 3B twice, then that 2 times invoices, same invoice which is reflecting twice in the 2B, twice in the 3B, will be reflected in your 6A. So you need to take into consideration the claim, reversal and reclaim transactions which have been disclosed in 3B. So you need to understand that 3B has to be bifurcated into original claim, what has been reversed, what has been reclaimed. All tabulations have been done for all the 12 months. Otherwise, if the tabulations are not ready, reconciliation of 3B is not done, then table 6 and 8 will not be reconciling with each other. So we need to understand that we need to educate the client so that our burden gets reduced, because they will need to understand that 3B has to be bifurcated into multiple aspects. 23-24 claimed in 24-25, original claim, reclaim, reversals, everything is coming in GSTR 3B. So population of 6A is very, very important, because we need to understand that it takes into consideration multiple aspects. Then the ITC which is claimed reverse due to rule 37-37A will be considered as ITC of that year only. Therefore, in table 6, there are two concepts, table 6B and 6H, which I will be taken care in the next slide itself. The table 6A, as auto-populated, includes the ITC of the invoices of the previous financial year, which has been claimed in the 3B of April 24 to October 24 of the current financial year. Such ITC may be reported in the table 6A1. A new table 6A1 has been reported, wherein in 3B of 24-25, if any input tax credit pertaining to 23-24, the previous financial year, has been taken in 24-25 3B, then such transactions, such ITC will be reported in 6A1. So total ITC of 24-25 less ITC of 23-24 claimed in 24-25, that will be reduced, and whatever is remaining, that is 6A2, will now be exclusive ITC of 24-25, which has been claimed in 24-25. If you have claimed some ITC in pertaining to 24-25 and 25-26, that won't be populated over here. The reason being that ITC is claimed in 3B from April 25 onwards till October 25. So that ITC will not be coming in table 6A, because 6A is auto-populated for 3B between April 24 and March 25 only. So this is very, very important aspect, because when we do the reconciliation of table 6 with table 8, this is going to be a major difference of reconciliation which we need to understand. Now, if you remember, there was a circular in number 170 wherein it was how to claim the input tax credit, how to reverse the input tax credit, and how to reclaim the input tax credit. Everything has been structured with examples. If the assessee has properly followed that circular, then ITC as per 2B and ITC as per 3B will match. So that won't be a major problem. But if the client has not followed the 2B pattern or the circular number 170, then we need to rely on the scrutiny and working of ITC availed in 3B, and that too invoice-wise, invoice level, at that micro level. So that needs to be understood by us and explain to the client that why we need this bifurcations. 6A1, what I told you, is inserted to isolate the ITC related to the previous financial year that was claimed in the current financial year, to prevent the double counting of input tax credit that was already reported in the previous years, table 8C and table 13, to avoid the reconciliation discrepancies. According to the instruction number 2A in GSTR 9, table 6 and 7 of the said form, taxpayer is expected to report only the relevant values for the current financial year, and therefore 23-24 related ITC is shown in 6A1 so that proper reconciliation with 2B is properly possible. You must explicitly separate ITC for 23-24 for the pure 24-25. We need to ensure that 6A1 is also present inside the auto-populate table of 6A, because table 6A1 is a subset of extraction of table 6. Because I will tell you an example. If table 6A total ITC via 3B is 100 and table 6A1 is 20, then table 6A2, that is the current year ITC for 24-25, becomes 80. Since 6A1 is not a part of 6A, your 6A2 will be inflated, leading to the 8D mismatch. So you need to understand that whatever you are showing in 6A1 is already a part of 6A. If you are in 6A1, if you are showing certain ITC transactions which are not there originally in 6A, then definitely your 8D will be a mismatch. The reason being table 8 is coming from 2B and table 6 is coming from 3B. So if there is discrepancies somewhere in between them, then therefore your table 6 will be in a problem. Accordingly, your table 8 will also lead to multiple problems. The date filter, we need to understand that invoices reported in table 6A actually have an invoice date between April 1, 23 and 31st of March 24, but a GSTR 3B filing date between April 1, 24 and October 31st, 24. Only those transactions will be filtered out and shown in this 6A1. Now table 6H, very important aspect. It will be noted that table 6H label clearly states that information declared in 6H is exclusive of table 6B. So whatever is showing in 6B will not be shown in 6H. Therefore, information is declared in only one of the rows. As per instruction given in table 6B and 6H in form GSTR 9, ITC that was availed, reversed and then reclaimed in 3B must be reported in table 6H and not in table 6B. Don't worry, I will be taking the Excel sheet examples for table 6H because people find it difficult कि ये transaction 6B में दिखाना है या ये transaction 6H में दिखाना है, ये समझ में आता नहीं है. So definitely I am going to take an Excel based example. Then if the full or proportionate ITC is reversed due to non-payment, full or proportionate to a supplier within 180 days, the recipient becomes eligible to reclaim the credit upon making the payment without any time limit. So once you have claimed, for the reclaim under Rule 37, no time limit is applicable. So we need to understand that such reclaimed ITC should be reported in table 6H. Why it is going to be 6H, I will tell you when we proceed with the examples. It should not be reported in table 8C or table 13 of GSTR 9 for the reporting financial year. Further, input tax credit temporarily reversed under table 4B2 of 3B and subsequently reclaimed within the same financial year should also be reported in 6H of GSTR 9 for the reporting financial year. Further, ITC is claimed and reversed in ITC in the previous financial year for any reason and you must now reclaiming it. You must not report the same in table 6H. Instead, you must report it in 6A1 of form GSTR 9 of the next financial year. Don't worry, all these examples I have covered in the Excel example which I am going to take afterwards in just after 15 to 20 minutes. So basically, this is a screenshot of the reclaim related adjustment. ITC as per Rule 37, 37A, ITC belongs to the year in which you reclaim. No reporting in the 6A because ITC belongs to financial year 24-25. Any other ITC other than Rule 37, 30A? Yes. Then the invoice management system integration. Under table 8A, you need to understand table 8A is the ITC as per 2B is now tightly coupled with the new IMS logic. Initially, it was period based. Now it is to be document date based. So basically, this time they have made a new change in table 8. In last year, table 8, what was happening is whatever ITC has been claimed in 2B and 3B, all was getting auto-populated in table 8. But in current financial table 8, ITC exclusively for financial year 24-25 will be auto-populated. Exclusively. So try to understand what is going to be in there. Invoices dated 24-25 will auto-populate here. If you have pending or rejected actions in IMS, ensure that they are reconciled before finalizing table 8A to avoid DRC 01 notices. if your books didn't account for them in financial year 24-25 because you claimed them in May 25, you must report this transaction in table 8C. ITC claimed in next financial year. If you miss this, table 8D will show a negative value. Why it will show a negative value? Because if you have forgotten to show 8C, then 8D will have a negative value, that is excess ITC claimed. But practically you are not claimed anything excess. The extra ITC which you have forgotten to claim, you have claimed in next financial year. So that needs to be taken care of while reconciling table 8. Now we are going to go to specific cases, very important now. Now in the IMS, credit notes are rejected. If you remember, in your IMS, the supplier has to upload his GSTR 1 and the recipient is going to accept his IMS. Now if by example, if for any reason the credit note has been rejected, what will happen? The credit note will again flow in your GSTR 1 and the liability will increase, because the credit note has been reduced initially when we file the GSTR 1, but if that credit note has been rejected by the recipient, then again your liability is going to increase. Now, how do we show this increase or rejection of credit notes while auto-populating the GSTR 9? That is the question. So now what will happen? We'll take an example. November rejections added in the 3B liability for December 24. Any credit note for November GSTR 1 has been rejected. Now that rejection will get added to your 3B liability for December next month, and so on. Now March 25 rejections will be added to the 3B liability of April 25. Now this rejections, how to disclose? We need to treat this taxable amount of credit note as a commercial credit note for the turnover reconciliation purposes only. This is not a commercial credit note. Try to understand. But the treatment will be similar to credit note of commercial transactions only for the purposes of GSTR 9C related transactions and GSTR 9 reconciliation related transactions. So we need to understand that because of this credit note related transactions, your liability is going to increase in GSTR 1. Since now liability is going to increase, but actually in books we have accounted for the credit note only once. But while doing the GSTR 1 and 3B, the same credit note has flown to your liability one more time. And therefore, to take care of the excess entry in GSTR 3B, while reconciling with your 9 and 9C, this should be treated as a commercial credit note only for turnover reconciliation purposes. Mind well, it is only for reconciliation purposes, not for any taxability purposes. For March month rejection, it should be reported in table 10 of GSTR 9, reported in next financial year, because this liability will again come to April 25, and therefore this kind of credit note related rejections should be handled in table 10 of GSTR 9, because table 10 is liability of 24-25 shown in 25-26. Now one more case which we are going to take, it is exports reported in GSTR 1 on FOB basis to match the shipping bill, but in actual the transaction is CIF, cost, insurance and freight basis. How are you going to show it? The accounting will vary, the shipping bill will vary. So now how are you going to disclose it? In GSTR 9 you need to report as per GSTR 1, whatever value is shown in GSTR 1 you need to take it in GSTR 9, and the freight component can be taken in GSTR 9C as an adjustment to turnover on account of section 15 in table 5M. So you need to note down these adjustments and accordingly report them in GSTR 9C. ITC which is reversed in April 25 to October 25. Now if return is filed up to 30th of November for October 25, the reversal is to be reported in table 12 and not in table 7. Table 7 will come only when reversal is done in that financial year, that is 24-25. So whatever reversals have been done in 24-25 will be shown in table 7, and whatever reversals pertaining to 24-25 have been done later, that is to after April 25 to October 25, they will be reported in table 12 and not in table 7. So please understand the difference between table 7 and table 12. Now 4G1 which I have already taken care of earlier, there is some minor changes in the labels. Okay, when the label change from table 6H to table 8A, in the auto population create any difference in table 8D, Now we need to tackle this issue as well. The label change in table 8b and the delinking of table 6h from table 8b will not create any difference in table 8d. Now what is this difference? If you go to table 6h, table 6h is only the reclaiming portion. Reclaiming portion means originally you have already claimed it in earlier previous financial year or maybe in current financial year, and that reclaim is coming to 6h. So when you take 6b, which is claiming in current financial year, only that current financial year and 2b, that is table 8, will be reconciled with each other, and therefore the possibility of differences in table 8d will be 0. Now goods have been imported in financial year 24-25. However, ITC has been taken in 25-26. Okay. Now, for example, there is a bill of entry which you have paid. The client has paid the custom duty and IGST in the month of March 25. But the goods actually came to your godown in the month of April. So ITC cannot be claimed in March. It has to be claimed in April only. So how do we report such kind of bill of entry related transactions? So this is an amendment which has happened in this financial year itself, GSTR 9. Previously, this amendment was not there. This will be reported in the newly inserted table 8H1, and it will not be reported in table 6E of GSTR 9. So IGST paid on import of goods to be reported in 8G, and amount of ITC claimed in next financial year is to be reported in 8H1, and therefore the difference in the table 8I will be nil. Such ITC will also be reported in table 13 of GSTR 9 of 24-25, because the payment has come in financial year 24-25, but the ITC has been claimed in 25-26. So this will be reported in table 13. Now we need to understand that import related transactions are not reflected in table 8. Table 8 is normally only and only forward charge transactions, FCM transactions. So this will not be reported in 8C, but will be reported in table 13. So there is a minor difference over here as far as imports are concerned. Now table 8 is auto-populated from 2B for the financial year dated 24-25. Reported by the supplier in R1 of 24-25 will be recaptured here. Invoices for 23-24 will be excluded. So logically, table 8A Excel may contain some extra entries related to RCM and ineligible ITC. Now, if you have already filed GSTR 999C for a few of your clients, then you will understand that the table 8A figures which are available online in auto-populated GSTR 9 are different from the 8A related Excel sheet which is downloaded. So this year we need to do additional reconciliation of the 8A figures which are available on the portal in table 8 and the auto-populated downloaded 8A Excel. So now I have given here an example that in case of one of my client for 8A, the transactions were such that CGST what 1 crore 70 lakhs 51,106, CGST, HGST and IGST that were auto-populated in the portal, that is uneditable field. But when you try to download that 8A Excel, the amounts are different. So what we need to do over here is we need to do a reconciliation of the 2B and 8A. 8A as per portal and 8A as per Excel sheet. Both have to be reconciled. So here I have taken an example of reconciliation of 8A and 2B. So as per 2B, these are the transactions 170, 170, 49, which is as per 2B for 24-25. Now 8A FCM 23-24 in 22B of 24-25 needs to be properly bifurcated. RCM has to be properly bifurcated. Import has to be bifurcated. FCM transactions have to be bifurcated. These are 2B FCM invoices of 2B shown in 25-26 for 24-25, as well as FCM credit notes for 24-25 but shown in 2B of 25-26. We need to understand that FCM plus FCM invoices shown in 25-26 minus FCM invoices for 23-24 shown in 2B of 24-25. If you do the mathematical plus and minus, then your 8A and your 2B will match with each other properly. Invoice level matching will happen. So we need to do these transactions, these reconciliations as well. Not only the regular 2B and 3B transaction reconciliation, but additional reconciliation of table 8A Excel online, and table 8A and 2B reconciliation have to be taken care of by us. Otherwise, then maybe there will be difference in table 8. So to understand what exactly is the difference, we need to do these kind of reconciliations. Now, table 8B is auto-populated from table 6B. Table 8B and 8C capture the ITC on normal charge, that is the forward charge only. Import, RCM, ISD, everything will not come in table 8B. So as RCM is not included in table 8B and table 8C, therefore 8A should not take the inward RCM ITC, which I have already told. Table 8 is exclusively forward charge only. It won't take into consideration the RCM transactions. Now table 8C contain the data of ITC of current financial year, which is availed in next financial year within the specified time frame. This table shall not include any ITC which was claimed reported in table 4A of 3B and reversed reported in 4B of 3B in current financial year and reclaimed in next financial year. So we need to understand that table 13 of the ITC of the financial year availed in the next financial year. Now I'll skip this and I will take the next slide because I have made a full comparison of table 8 and table 13. So if there are any import of goods, that will be shown in table 13 but not shown in table 8, 8B or 8C. If there are import of services, the same RCM transactions are not shown in table 8A or 8B or 8C. They will be shown only in table 13. Input tax ISD, input service distributor, those transactions will also form part of table 13, but they will not form part of table 8A, 8B or 8C. FCM transactions, yes, they are shown everywhere in table 8, 8B, 8C as well as table 13. Blocked input tax credit will also flow everywhere because that at 8 we need to understand that whatever only availed has been taken, because that reconciliation has to be done by us separately. In table 8A, ITC restricted due to POS supplies will also flow in 8A in the Excel, but in the table 8A auto populated on the portal, such transactions will not be there. So that is that needs to be understood by us very minor situations. I'm going to take the sir, can you help me? Can you see the table 8A now in Excel? Venugopal sir?
No, sir. It is a table 8A and table 13 of GSTR. That is the.
You are sure? Okay. So आपको सिर्फ यही दिख रहा है ना? ठीक है.
It's a PPT only, not Excel sheet.
Okay, can you now see the Excel sheet?
No, now Excel sheet is
active. Yes.
Okay. So now we are going to take one example. I'm trying to give you an example of the actual reconciliation, how we need to do. Now, in case of one of my client, I have taken a live example. Now, as per portal, when you log into GSTR 9 page on the website, these are the 8A portal figures which are not editable. Non-editable जो field होती है ना, that is the field which is showing these figures. But when you go to table 8A, this is the table 8A of one of my client, which I have downloaded from the portal. I have deleted the names. Now this is the table which we are going to do the filtering. You need to put a filter over here and make a summary of whatever 8A related transactions are available. B2B, B2A amendment, credit debit notes, amendment, e-commerce operator amendments. And now here I have made the reconciliation for us to understand what is coming on online and what is coming in Excel. Now in Excel, forward charge transactions have to be separately filtered. Over here, if you see, I have made a filter of forward charge transaction, that is supply reverse charge yes no. If you do it, then you will get the filter of the transactions which are available. So forward charge transactions have been separately taken out. RCM transactions are also shown in B2B. If you see over here, supply attract transactions under reverse charge, if you say yes, all these are your reverse charge transactions. So this total ITC 75, 75 and 2891, These I have taken over here, 75, 75 and 2891. Then the debit notes are taken over here, credit notes are taken over here. If you go over into 2B, if you see over here, then reason, if you filter the reason over here properly, then POS lies in supplier state. Such kind of transactions are given in table 8A. So you need to understand that such transactions are also to be filtered out, and we have to put it over here, ineligible. So now what is the formula? If you can see over here, I have added FCM, I have added the debit notes, I have reduced the credit notes, and I have reduced the ineligible ITC due to POS related transactions in supplier different state. So if you understand this, if you are able to see it, otherwise I will just, okay. So this is the formula which we need to understand, that 8A as per Excel will contain RCM transactions as well. So these needs to be excluded. Ineligible transactions need to be excluded, and only then you can reconcile 8A as per portal and 8A as per the Excel sheet. So this is an additional reconciliation exercise which we need to do in the current financial year, GSTR 9. Okay, we'll go back to the PPT. Okay, is my PPT visible, sir?
Yes, sir. Yes. And now the screen is about, can you enlarge it, sir? Okay. It is table 8 and table 13.
Correct, sir. Correct.
Yeah.
Now, most of the transactions for GSTR 9 have been taken care of. Now we'll go to table 12B, which is of GSTR 9C. Now table 12B, because ITC booked in earlier financial year claimed in current financial year. Why I have directly jumped to table 12B is earlier tables are the same whichever there for the multiple last 7 or 8 years. There is not major change in any of those tables. So I am not wasting time on explaining all the same tables again and again. What is going to change or what is going to affect us in current financial year, I am laying emphasis on those areas itself. Now table 8A, if you remember, in table 6 of GSTR 9, we are now bifurcating the ITC for 23-24 separately and 24-25 separately. So 3B will contain 23-24 and 24-25. But when you go to table 12B, you will go to table 12B, there will be a difference. Why there will be a difference? Let us understand by way of an example. Yes. Now, whether Excel sheet is visible, sir?
You are not audible. You are mute. You are mute. Sir, you are mute. Parag sir,
Yeah.
you are in mute. Yeah. Now it is.
Hear me now? Okay.
Yeah.
Okay. Now, if we refer to 2B of 24-25, we need to bifurcate the transactions of ITC for 24-25 and 23-24. When we do the filtering, example is there 10 rupees of ITC pertains to 23-24 and 90 rupees of ITC is pertaining to 24-25. So your total 2B is of 100 rupees. Now take an example for 2B of 25-26. Transactions for 24-25 are not shown anywhere. So the ITC is 0. Now ITC claimed in 3B is 100 because 2B is 100. Ideally your 3B should also be 100. In the first example, we are not taking any temporary claim or recall. It is a simplest ideal form of transactions. So net claim is 3B is 100 minus 0, 100. In 3B of 25-26, there are no transactions for 24-25 which have been shown. So ideally, everything is shown in 24-25 only. So now what will happen? When you go to table 6A, table 6A is coming from ITC availed in the 3B. Now 3B is how much? 100. So your 6A will also be 100. 6A1 ITC of 23-24 but availed in 3B of 24-25 is 10, which is this 23-24 availed in 24-25 which is 100, which is 10. So ITC of 24-25 is 90, 100 minus 10, and your 6BE will be 90 because there are no reclaim in this example. If there was a reclaim, then 6H would come into picture. But in this specific simple transaction, there is no reclaim. I am going to take for reclaim also, don't worry. So in table 7, there is no reversal. So it will be 0. So net ITC will be table 6 minus table 7, which is the table 7J. So 90 minus no reversal, that is 0. So your ITC is 90. Now you go to table 8. Table 8 is exclusive ITC of 24-25 from 2B of 24-25, and so now you go to the formula. How much it is? It is this plus it is this. Now this is 90, this is 0. So total 24-25 shown in 24-25 and 24-25 but shown in 25-26. 90 plus 0 is how much? 90. So it will be 90. It will be linked to 6B. How much is 6B? 6B is 90. So 90 minus 90, in 8D there is no difference. Okay. Now you go to table 9C of GSTR 9C, table 12. ITC as per books 90. Previous year's ITC. Previous year ITC is coming from where? This example 23-24 taken in 24-25. Now this 90, if you take 10 over here, effective ITC is 100 because there is no carry forward. ITC as per 7J, which is coming from table over here, 90 over here. We are going to link it to 9 from 9C. It is 90. So now there will be a difference of 10 rupees. Now what is this difference? It is clearly the difference related to 23 ITC 24 taken in 24-25. Now in the recent FAQ series, second FAQ series, which was released in 4th of December, they have given an explanation to this, that in the difference, after this you need to explain it, why there is a difference. There you can put a reason that because of 23-24 transactions, which is coming in 6A1 but not reduced from 12B, therefore reconciliation amount of 10 rupees is equal to the transaction amount of ITC claimed for 23-24. Now this is what the FAQ states. But personally what I feel is, since this 8A1, 10 rupees ITC for 23-24 availed in 24-25 has already been reduced over here. So logically, according to me, this is my personal opinion, people may have different opinion with them. This 10 rupees, 1 minute, where is it? Yes, over here. This 10 rupees, if you delete it, if you don't disclose it, then there won't be any difference. I understand that this table A12B is a mandatory table, but you need to take into consider your professional experience and professional opinion as well. If at all we do show 10 rupees over here, what will happen? There will be a difference. Although you are going to explain it, you are going to give an explanation to it, no problem. If even the FAQ second series also says that this difference has to be explained, but my professional expertise says that it's better you delete this and give an explanation to it. The reason why I am telling you is, if you are showing any difference in 12F, the automatic software which has been computed by the system at the back end, GST, they will pull a trigger pop-up हो जाएगा कि difference है 12 में, 9C में, and the assessee himself has filed a 9C, so he is accepting the difference. So this trigger will unnecessarily elicit a notice to the client. So we need to understand that such kind of notices, if you want to avoid, then you need to delete this table 10. Delete this point over here. If this point will be deleted, what will happen? This will be 0. And if there is 0, everything is reconciled perfect. Obviously, there won't be any trigger. And therefore, you can safeguard the client as well as you safeguard your working. So my professional opinion says that we should avoid showing it in 12B. People may show it in 10, no issues. There are two opinions available. In that case, there will be a difference and you need to give an explanation. Explanation तो दोनों जगह पे आने वाला है. Explanation will come in both the situations, whether it is over here or whether it is shown or whether it is not shown. But it is better to not show to avoid the trigger. That's the only thing which I feel is necessary for us. Now we will also go to another additional examples which I said I will be taking care of. But let me first finish the. Okay, now my PPT is visible to everyone.
Yes, sir. Yes. Table 1 to 8. 12B. Sorry. Table 12B.
Yes, 1 minute.
ITC booked in earlier financial year, claimed in current financial year.
Correct. So now 12B I was explaining why we have an Excel sheet. So we are coming back to the slide why I took you to there. So now possible note last year's ITC of so and so amount shown in table 12.
Now it is PPT, not Excel. Okay.
Correct. PPT. I am coming back to the PPT. I explained example why I have an Excel example. Now I am getting back to the PPT so that you will understand the PPT more clearly. So now this is the note which I will be giving in case of my clients, that last year's amount of ITC shown in table 12C 23-24 of GSTR 9C has not been shown in table 12B because opening and closing, last year's closing will be current year's opening. So what was shown in 12C last year will come in 12B this year. Has not been shown as the same has already been eliminated in table 6A1. Table 6A1 is what? 23-24 ITC claimed in 24-25. Table 23 ITC of 23-24 claimed in 24-25. As per the updated disclosure requirement wide notification number 13/2025, also the figures in table 12E 9C which are coming from table 7J of GSTR 9 are also net of table 8A1. So if you put this note, your table 7J figures will match with table 12 and there won't be any difference. If there is no difference, there is no trigger point. Of course, this is my personal professional opinion. People may have a different opinion. If you want to show it, you can show it. Then accordingly, the note will change. Now we are going to understand the red flags while we finalize the GSTR 99C. Because this year's scrutiny is no longer about matching the figures, but it is also about the compliance logic. What is the compliance logic? 8D negative. If there is 8D is negative, then there is something wrong in your table 6. Something now wrong in your table 8B. Because 8B is flowing from 6B. What is going to be the problem? Tables ITC available in 3B is greater than ITC available in 2B. And therefore 8D might be a problematic situation. 8D can go also negative. When can it go negative? I have taken the example over here. If say import of goods is shown in 8B or 8C, then definitely your 8D will be negative. If you have shown RCM transactions, it is going to be negative. So needs to be understand. Scrutiny negative value implies you have claimed excess credit, and credit for fake invoices could be a situation. So you need to understand this table very much. Only the FCM transactions are flowing in table 8. RCM, import of goods, ISD, block credit, ITC due to POS rules are not coming in 8A or 8B or 8C. So 8D should normally be positive or 0. It cannot be negative. Negative means critical red flag. You have definitely taken excess credit. And in spite of all the reconciliation, if you really feel that client has really taken excess credit, then you need to file a DRC03 by way of repaying the excess credit with interest. One more red flag is GSTR 1A and 3B. From financial year 24-25 is the first full year from July 24 onwards, wherein 1A in addition to 1, the amendment facility before filing 3B is active. So the rate of liability declared in 3B cannot be less than 1 and 1A. Because if you made any mistakes in 1, you amended that in 1A, then your 3B will be 1 plus 1A. Now what is the red flag will be, taxpayer argued that GSTR 1 was just a reporting error. Now GSTR 1A available to fix those errors before filing 3B of that specific month. So if any shortfall is there in 3B, it's an immediate demand trigger. Because in GSTR 1 you are showing 100 rupees liability. In GSTR 1A you have additionally shown 5 rupees as additional liability. So your 3B should be 100 plus 5, 105. It cannot be less than 105. If there is less than 100, so that you have edited it manually. You have edited the 3B manually. In that situation, there will be a difference, and such will be a trigger for the demand immediately. So this is an important red flag. Improper handling of RTC claimed in 3B, which is a very, very, very important aspect, which we are going to take care of in the way of examples also. Turnover mismatch in GSTR 9. Turnover as per 9 and turnover as per audited financial years. If the 5O unreconciled turnover related reasons are shown in 5O a very high amount, and if the reconciliation is not attached to the 9C, then definitely there is a red flag that there is something which you are not shown in GSTR 9. Maybe you are not paid the tax also. So that is a very important aspect. Failing to report interest on FD as exempt turnover while GST isn't payable, omitting it changes your RTC reversal ratio. Very, very important. Unbilled revenue, discrepancies arising from unbilled revenue recognition in books and invoicing in GST needs to be taken care of in the reconciliation for GSTR 9C. E-invoicing gap, invoicing karna tha. You need to do the invoicing, but you have not done the invoicing, then definitely it will be in denial of ITC and penalties for you. Then RCM liability paid in cash is lower than RCM liability paid. So we need to understand you cannot claim ITC on RCM unless you actually paid it. Now this is an audit check which we need to do while doing the scrutiny. So as I said earlier, when you do the scrutiny earlier in the month of July, August or September for your clients before finalizing the books of accounts, you need to understand we need to do the scrutiny not only from the income tax or the company law point of view, but we need to do the scrutiny even from the GST point of view. For example, expenses in P&L, legal expenses, GTA, security, director setting fees on which 194J is deducted, and whether the RCM has been paid or not. Then there will be foreign payments scrutiny officers. Now at the back end, the GST department also have access to your 15 CACB filings which the client is doing. So now if you have made a 15 CACB remittance for import of goods but not paid the RCM on the transactions, then that is going to be a major red flag, because 15 CACB is definitely for the import related transactions. For goods, if it is there, it won't be a problem. But if it is for the goods, yes, it is going to be a problem for RCM. So it's a major red flag which we need to understand. The creditor staging, if you understand, if you remember, for the private limited companies, the Schedule 3 related disclosure, we need to, for the trade payables, we need to give an aging bucket. So while we prepare that aging bucket, you need to also prepare this aging bucket. Why? Because Rule 37 says that if you are purchased but not paid the supplier within 180 days, then you need to reverse the ITC. Now, many times during the scrutiny, we find that client has not paid it, not paid the transactions beyond 180 days, but even the ITC is not reversed, then we need to reverse it. Now, if the client has paid beyond 180 days, but still not reversed it, then at least ensure that the interest on such excess reversal or the reversal which is done and reclaim which has been done, then during that period the interest liability needs to be paid at least, because otherwise there will be a problem when we face the GSTR 9C scrutiny. HSN code mismatch. If the turnover is more than 5 crores, you need to have 4 or 6 digit HSN crores. Then risk is HSN is strictly enforced to other generic descriptions or flag. Mismatches between the tax rate declared and the statutory tax rate may trigger. If the HSN may have 18%, but your client has paid GST at 12%, you need to understand that the HSN may be wrong or the liability may be computed at 12%. So the additional 6% needs to be paid. So HSN rate and HSN classification and actual goods classification has to match with each other. There is one more aspect which I am going to cover today is 194R. 194R, if you remember in this year's 26 AS, many of us had this 194R related disclosures in 26 AS. So now we need to understand whether there is any GST implication on it. If it is a pure gift, no GST is payable on transfer, but ITC must be reversed, because under 17.5H, ITC is blocked. Companies deduct 194R correctly, but forget to reverse the ITC relating to GST audit demands. So when we do the scrutiny of profit and loss account, if there are any heading called as gifts or momentous to clients to refer to your suppliers during Diwali, during Christmas or any other transactions, then we need to scrutiny that specific ledger, whether ITC has been blocked, whether ITC has been claimed. If the client has reversed it, it is fine. But if he has not reversed it, then we need to understand that ITC should be reversed. And if he had not reversed till date, then get it reversed by way of DRC 03. Now, if such kind of transactions are contractual, that is incentive based, it is a supply and GST is payable and ITC is allowed. Very, very important aspect. Since the dealer had done something, maybe he has achieved a target, then to get this is not a gift, it is a barter exchange. This item is consideration for the services of sales promotion. What you need to do, you must treat this as a supply of goods, issue tax invoice, pay GST on open market value. Since you have paid the output tax, you can claim the input tax credit on the purchase of these items. So this is contractual incentive which we need to understand. Then cross charge, very, very important aspect, but related to 194R. Now cross charge, if a HO is giving free software or services to branch, TDS is not applicable because the PAN number remains the same. But GST is applicable under Schedule 1 being a distinct person. Head office has a different GST number, branch has a different GST number. So 194R will not apply. But GST will apply and companies miss this Schedule 1 transactions. So when we do the scrutiny, we need to understand whether such kind of transactions are there in case of client who has multiple GSTN across same state or multiple states, whatever be the case. Now, how do we do the valuation? For income tax TDS purposes, it is on fair market value or cost to the provider as per the circular given in Income Tax Act. But for GST transactions, it is on open market value or the transaction value as per Rule 27 to 31. So the transaction value valuation and the income tax related TDS related valuation will be different. So two separate valuations will lead to two different documentation, two different working papers and two different reconciliation. That is 194R TDS, what is the taxable value, and for GST, what is the taxable value. There will be different. So we need to keep this on documentation with us. Now foreign conferences, airlines, hotel stay sponsored, no TDS is provided because in such a case, if the person who is actually traveling abroad, if he is paying the TDS, then we need not to worry about the 194R aspect. But if the benefit is to distinct persons within India, GST may apply under import of services because service has been provided outside India. The CBIC had in June 2019 has issued a circular 105 which was initially clarified for the post-sale discount, but it was later withdrawn in October 2019 because it was too aggressive. But sometimes practical experiences, even though it was withdrawn, GST officers are still using its logic during audit of 194R items. So we need to understand that one more reconciliation is there. Our GSTR 1 and 194R of our 26As, whether those transactions are reported in the books of accounts. If they are not, at least report them by way of DRC 03. Otherwise, we need to face the scrutiny at a later stage. Then one more aspect is the late fee calculation. It is for us to just read it. The threshold is given 50 rupees if your transaction is up to 5 CR. Then if it is 100, if your transaction is up to 5 CR to 20 CR, and if your turnover is more than 20 CR, it is 200 per day, 100 CGST, 100 HGST, subject to the limit of 0.04%, 0.04% of the turnover of that specific state for which you are delayed filing the GSTR 9 or 9C. Now this is the table. Late fees कब लागू हो जाएगी? 34 December is the due date. If GSTR 9 is filed on 20th of January, late fee will be applicable for 20 days. उसके बाद अगर GSTR 9 फाइल किया, if the GSTR 9 is filed on 20th January itself, there won't be separate late fees for GSTR 9. But if GSTR 9 is filed on 20th Jan and GSTR 9C is filed for 25th Jan, that is 5 more days, then for 9C additional late fee of 5 more days will be computed by the system. So this is an additional feature which I have enabled for revenue purposes in 9 and 9C both. So there will be late fees for 9 separately and there will be late fees for 9C separately. Now we need to understand, I'm going to take one more example over here, which is claim, reclaim and reversal. I hope my Excel sheet is now visible.
Yes, sir. Visible.
Yes. So now we'll take one example for that 6B. 6B may, when we need to show it in 6B, when we need to show it in 6H. Now we'll take one example for circular 170. That is, everything is complied with respect to 170. We'll take one example 3B. April 24 I have claimed 120 ITC. April 24 only I reversed 120 for some reason, and in May 24 I have reclaimed it. Now how do we show it? This is we have claimed in 3B, so definitely 6A will be 240. Why it will be 240? Because 2B, the transaction is shown only once, but the same transaction is coming in your 3B once you have claimed it in April 24, plus again you have claimed it in May 24, so you have considered it twice. So 120 plus 120, in that 3B your transaction will come twice, so it will be 240 and not 120. Now in first example, there is no transaction for 23-24, so there will be 0. So 240 minus 0, it will be 240. Now this will need to bifurcate. We need to understand this 2B 24 April 24 first claim, fresh claim, original claim will come in 2B, will come in 6B, and this second time claim or the reclaim will come in 6H. I will tell you once more, this 120 is the first claim amount in April 24 3B, and this 120 which is shown in table 6H is this 120 amount which is reclaimed in May 24 3B. So accordingly 120 will be shown in to 6B and reclaim will be shown in 6H. So total is 240. Now we have reversed 120 in April 24. So that reversal will be shown in table 7. 120 is reversed. So you have availed 240. You have reversed 120. So net 7J is 120. 240 minus 120. Now we go to 8A. 8A is coming from 2B. This transaction will be there in your 2B only for one time, because the that 2B is flown from GSTR 1. So GSTR 1 में एक ही बार आएगा, तो आपके ये 2B में भी एक ही बार आएगा. So 120 will come. Now 8B is coming from 6B. Where is this 6B? 6B is this over here, 6B, which is 120. So now 8C में कुछ नहीं आएगा, 8D में भी reconciliation का problem नहीं आएगा. This minus this, so difference is 0. So your 8D is 0. 0 means everything is properly reported. Now this is a basic example which we have taken. We'll go and do one more example. What is this example? Claim and reversal in 24-25. Yeah, what was there over here? Claim, reversal and reclaim. Everything was in 24-25. Now we are making it little bit of complication. Claim and reversal in 24-25. Reclaim in 25-26. Now ITC of 24-25 is reclaimed in 25-26. How are we going to show? March 25 you have claimed 120 rupees. March 25 itself you are reversed, because this is an example related to claim and reversal in 24-25. But reclaim is in May 25, that is financial year 25-26. Now how are we going to show? Now if you are going to show claim it in 3B, 120 will come in 3B. 23-24 claimed in 24-25 is 0. So 6A2 will be 120 minus 0. So your table 6A, that is table 6A2 will be 120. Now this is claimed for the first time. This is the original claim, fresh claim. So it will come in table 6B and not 6H. So now your table 6J, 6I will be 120 minus this, it will be only 120. 6J will be how much? 6A2 120 minus 6I 120. 120 minus 120, table 6J will be 0. Now you have already reversed also in the same financial year 24-25. So this reversal will come over here, table 7. How much will be this reconciliation? Table 7J, 120 minus 120. So net ITC will be 0. But table 8A में तो आएगा, because table 8 is coming from 2B. 2B में तो invoice already है, you have already accepted it through IMS. So table 8A from 2B will show it. Now 8B is coming from where? It is coming from 6B. So 120 will come over here. So there 8D will won't be there anywhere. Now very important aspect over here is this 120 over here, which you have shown, this reclaim, which you have shown in May 25, that is financial year 25-26. This will not be shown in 8C. This is as per FAQ point number 16. They are clearly specified that this report will show in only table 13, but it will not show in table 8C. Now what will happen if we show it over here, 120 अगर यहाँ पे आ गया, तो this minus this, it will be showing at minus 120. So to avoid this scenario, they are clearly stated that this will not be shown over here. So this will not be shown in reclaim in table 8C, but it will be shown as table in 120 in table 13, because table 13 is ITC of 24-25 claimed in 25-26. So यहाँ पे आएगा, लेकिन यहाँ पे नहीं आएगा. Got the point? Now we will go to same transactions, the spillover effect in next financial year. You have reclaimed it in May 25, 120, 123B में आ गया, तो gross 3B 6A में भी आएगा. In 120 it will come. Now when we consider for 25-26, this is belonging to 23-24 claimed in 24-25. Logically, so this table will be 24-25 claimed in 25-26. So this will come in 6A1. 120 minus 120 is 0. Now we need not bifurcate it into 6B or 6H or say neither 7. Nowhere. It won't come anywhere in table 7, table 8, table 13. कहीं पे भी नहीं आएगा. It won't come anywhere. We need to understand it won't come anywhere. Because for 25-26, this 120 is a transactions which is to be shown in 6A1. That is 24-25 ITC reclaimed in 25-26. So this is 120 minus 120 is 0. Since this is 0, nothing will be there in 6B, nothing will be there in 6H. Very important. If you thought that reclaim will come on table 6H, then you are wrong. It won't come in 6H, it will come in 6A1. Why? Because claim and reversal was in 24-25, reclaim was in May 25. So such kind of transaction will come in 6A1 and not in 6H. Try to understand, very important aspect. Then one more example, we'll go one more point ahead. Claim and reversal in 24-25 and reclaim in 25-26. But this is as per rule 37 and 37A. Now what is those rules? These are related to section 16.4 related transactions. So section circular 170. This example considers rule 37 and 37A. What is rule 37? If you have claimed the invoice but not paid the vendor in 180 days, you need to reverse the ITC. Or rule 37A, the invoices is available in your 2B, but the supplier has not paid the tax by way of filing his 3B. Okay, so you are also monitoring the 3B filing of your suppliers as well. Based on that, we need to take this example into consideration. Now, in June 24, if you have claimed 120, in December 24, you are reversed to 120. Why? Because after maybe say 180 days, you are not paid the client, or not paid the customer, or not paid the supplier. So you thought the reversal is a proper thing to do. reversed it. Then in May 25, this 120 related invoice has been paid, or else if you take a transaction of 37A, then that person has filed a late 3B, but he has filed a 3B, so now you are eligible to reclaim that. In either of the situations, 24-25 में claim हुआ, reverse हुआ. In 25, you have reclaimed it in May 25, 120 rupees, either because of Rule 37 or because of Rule 37A. So now, how do we disclose it in GSTR 9 and 9C? We are going to take it for both financial year 24-25 and 25-26. In 24-25, you have first claimed it in your 3B. So table 6A, it will come from 2B, from your 3B. Now, whether this transaction belongs to 23-24? No. So over here it will be 0. So 120 minus 0, it will be 120. Now, 6B, it is the first time claim. It is a fresh claim belonging to 24-25, original claim of 24-25. So you are going to disclose it at 120. So total will be 120. 7J, so table 7, maybe rule 37, 37A, 42, 43, 39, whatever may be the case. You have reversed it, 120. So it will be shown as reversal. So 120 minus 120, 120 minus 120, 0. So net ITC for table 7J for 24-25, 0. Table 8 may only one time it will reflect. It is going to be mapped with 6B. So it will be 120. So there won't be any difference. Carry forward, nothing will happen. Now there is one more aspect which you are going to understand is यहाँ पे मैंने 0 बताया है, लेकिन यहाँ पे मैंने 120 बताया है. See, we need to understand why there is a difference. Over here also, 24-25 claim reversal. Yeah, in this example also, 24-25 claimed and reversal. Reclaim is in 25-26. Over here also, the reclaim is in 25-26. Why am I not showing it in table 13 in this case? For this case, I am not showing it in table 13, but in this case, I am showing it in 120 in table 13. Can someone please tell me why it is there? You can write it in notes also. Why I am not showing it in this example and why I have shown it in this example? Can anybody answer? Maybe if it is possible, you can unmute and you can speak also if it is possible.
Okay, it is possible. Kindly speak or put it in the chat box.
Chat box, so that we'll be able to understand.
Will be enthusiasm to the speaker also. Okay.
Yes.
Yes, sir. Answer come 37A. Hence, this is not paid till
Correct.
180 days. 180 days rule of reversing can be based on the sundry creditors, sundry debtors as per financial statement by listing date-wise report, sir.
Correct.
Okay.
Correct,
Can
correct.
we answer in?
Right.
Okay.
So
Anyway.
basically, in Rule 37, basically this example pertains to Rule 37, Rule 37A, and this example is not for Rule 37 and 37A, for which time limit is there. If you see over here, Rule 37, 37A, there is no time limit to reclaim, and therefore that is one more reason to understand the difference between this example and this example. Now the reason why there is a difference is, which are highlighted in red. Reclaim, whenever you are reclaiming by way of Rule 37 or 37A, it is considered as the ITC of that financial year itself and not of the previous financial year, and therefore this is not shown in table 13. In table 13 this is not shown, neither it is shown in table 8C. Now we'll go one step ahead and find out for financial year 25-26. Now we have reclaimed it in May 25 3B. 3B में आ गया, so table 6A में आ जाएगा. Now since this is a reclaim, so we are going to show it in 6H and not in 6A1, because the original invoice was not dated 24, was dated 24-25, and therefore 6H will apply. We need to understand this distinction. Over here it was shown in 6A1. Over here we are not showing it in 6A1. This is the difference. We are showing it in 6H 120. Over here we are not showing anything in 6H. So that is the vital difference over here. Why? Because the one specific aspect is this reversal is because of rule 37 and 37A. So it won't be coming in here in 6A1. Now, does this belong to 6B? 6B is original invoices of 24-25 or original invoices of 25-26? No. Original invoice was dated 24-25, but which has been reclaimed because of rule 37 and 37A. So it will come in table 6H. It will come in table 6B. It won't come in table 6A1. Now 120 plus 120 minus. So it is 6J is 0. In 25-26 there is no reversal. So table 7 will be 0. 120 minus 0. Table 7J will be 120 because of the reclaim related claiming. Now table 8 में आएगा क्या? नहीं आएगा. It won't come in table 8 because that invoice date is dated 24-25. So that won't come in 25-26 8A. So, and if you see over here, correct, 8B is coming from 6B. In 6B, I have not shown it. So that is 0. So table 8A, that is 2B, 0. Table 6B, that is 3B, 6B is 0. 8C is also 0. Table 13 is 0. So all the transactions get reconciled with each other perfectly well. I hope this is very, very clear. I have finished with my presentation actually. Now we can open the floor for any questions.
Okay.
And we can take those questions one by one. And
Okay. And can you please tell about 9C also? 9C. Just a point. That's all. Point is that means already, because it is for not for a layman, it is for a person who is also having 5 crores of above. So
yes,
just a pointer that what are the important points added in now in
GSTR 9C, one more aspect has been taken care of is the e-commerce operator related transactions, which are shown in GSTR 9 table 4 or table 5, whatever may be the case. That amendment has also come to table 5 and table 7 of GSTR 9C additionally. Now, if you go to table 5 of 9C, there is one point which is 5O. Any other transaction, any other point of reconciliation. Can anybody tell me what aspects can be covered in that 5O? Any other? Any one example can anybody tell?
Put it in chat, or you can raise
Unmute also.
Unmute also. Anyone?
Foreign exchange gain or loss?
Foreign exchange gain loss already there, where it is there, na? In table 5, foreign exchange gain loss related reconciliation separate item line is already there. So we need to take care of that. I will give you one example. In case of one of my client, which is not a private limited company, they are maintaining the books of accounts on cash basis. So you need to understand when they raise an invoice and if they receive the money in 24-25 only, then that entry will come in the books of accounts. But when you raise the invoice and pay the liability by way of GSTR 1 and 3B, your 3B and GSTR 1 will have that invoice. But your books of accounts will not have that invoice if that is not received. So that is an item of reconciliation which we can show in 5O. Because GSTR 1 and 3B are filed on accrual basis, on a supply basis. Whenever the transaction gets hit, transaction need to be paid. Then GSTR 1 is generated and 3B is paid. But when you come to books of accounts, if the debtor is paying you the money, only then you are going to do the accounting. So if there is the minor difference of accrual and cash basis, that can be captured over here. Then in table in GSTR 9C, there in GSTR 9C, one more aspect is if you go to table 14, wherein ITC expense wise ITC reconciliation is to be given, that table is still optional. So don't worry, we need not go into that depth also because that is still optional. So that table 14 is not mandatory. So if you don't have that reconciliation papers available with you, you can skip table 14. No issues on that.
Okay, sir. Thank you. Thank you very much. And we can see the chat and we can make answer for that.
Okay.
And moreover, members can raise their hands also. All the questions will be answered truly now. Time is not a barrier. We can check it up. Okay. And
Okay.
thanks to all members who had been lively in the class for 2.5 hours. It is none. And I personally thank Parag sir because it is your enthusiasm and it's your personal affiliation to the group and to our members. You have done it. And also to Ganesh Murthy sir. Okay, over to Ganesh Murthy sir. You can wind up. Thank you.
So thank you for this wonderful opportunity and a wonderful session. CA Barak sir has rocked the session. And also, I thank all the participants to be patient all this time. And one more thing is, I will share the recorded session as a two-part. The first part will have a complete presentation of CA Parak sir. The second part will be the complete Q&A with the permission of Venu sir and Parak sir.
Yes, sir.
Okay. Thank you
I'll
for
share
this
my
opportunity.
PPT and the Excel sheet so that members can go through it. No issues.
Okay.
Sir.
Thank you, sir. Thank you, sir.
Thank you,
Wonderful.
sir. Thank you.
Keep it up. Okay, thank you.
The interested person may join our Telegram group. The link is posted in the description of this video for a taxation update. Thank you. Thank you all. Stay tuned for more updates.